Hi, I am Paul Thompson. I'm a mortgage consultant with Home Street Bank.
I'm Mark Eshelman. I'm a reverse mortgage loan officer with Pinnacle Capital Mortgage.
And I'm John Slocum. I'm a real estate broker with Adamas Realty in Vancouver.
And we're all part of the Vancouver Real Estate Voice. We're here to provide education and be a sounding board for real estate questions or mortgage financing questions, whether it's a forward or reverse mortgage. So Mark, I'm hearing that more and more seniors are now using reverse mortgages for retirement planning. Is that true?
Yeah, Paul, that's actually true. What we're seeing now is financial advisors are really starting to understand the reverse mortgage product and how it can be used to help cash flow stretch through the retirement years. Because most people are dealing with limited assets to start with on the limited assets to start with in retirement. Well, one of those assets most people have, or a lot of people have, is their home. And give you an example, I've got a reverse mortgage client right now in Southern California that we're putting their deal together. Her house appraised at $425,000. Now she owns it free and clear, but she's a little bit concerned that her retirement portfolio that she has, she's 76 and she retired at 62, has been dwindling away. She doesn't have a lot, it's not going to get her all the way through her retirement years if she lives into her 90s. So what we're doing is doing the reverse mortgage now. She's going to pull out about $25,000 up front to cover some remodeling on her kitchen and bathroom. Then she's going to actually be receiving about between $1,700 and $1,800 a month for the next 14 years is how she has it set up. By doing that, she's actually going to get a total of $331,000 of tax-free funds from her reverse mortgage over that 14-year period without making a single mortgage payment on that. At the time, she's doing the loan right now at $425,000 is her home value. In 14 years, if we just figure a 4% appreciation on that home, which is pretty darn close to the national average, if we factor that in, she's still going to have about $200,000 of equity left in her home in 14 years. So when you look at that all together, she's used $331,000 of her home equity, plus she'll have $200,000 left over, for a total of $531,000 of usable equity of her home for a house that right now is only worth $425,000. I don't know any other loan product out there or any other financial product out there that's going to give you the use of $531,000 tax-free on a home that's only worth $425,000 right now. If you can find out another mortgage product or another investment tool that can do that, I would love to hear about it. But that's what's available right now with a reverse mortgage. And if you'd like to know more about that, please give me a call. I'd love to help you out. John, the real estate market in Clark County has been pretty hot for several years. But what are some of the trends that you're seeing right now?
Well, Mark, a couple of the things I'm seeing this year are boomers and boomerangs. By boomers, I mean the generation post-war from 1946 to 1964. They're looking to right-size their home ownership. Many of them want to get into a condo, and that's really becoming evident in the condo market with a shortage of resale condos down to around 1.5 months of inventory, which is an extreme shortage of condos. But boomers are also looking at retirement communities such as Fairway Village or the villas out in Salmon Creek. But they're looking in Vancouver in general to be closer to their kids or grandkids, and the Vancouver side of the river, of course, has no state income tax, which could be like a 10% boost in pay for a boomer looking to retire in Vancouver. Then the boomerangers, or what we call the return buyers that have previously owned a home, but through the recession, the crisis of the real estate market in 2008, they were no longer homeowners. There may have been a foreclosure, there may have been a short sale, or they just sold and got out and want to wait. Well, the market has improved, their credit health may be improved, or their income is improved, and they're seeing this is a great time to get out of that rental situation and get back into home ownership and enjoy the rising market that we've been having. Paul, you and I are getting a large number of phone calls from first-time home buyers.
Mm-hmm.
What's the best advice you can give them when they call in?
Well, John, I can tell you why we're getting so many calls. and it's because of the rental market out here in Clark County. It has become so scarce. And I think you even touched on this in one of our prior videos, that the vacancy rate here in Clark County is 2%. 2%. And I'm hearing all the time about people who, when their lease is up, the landlord is raising the rent $200, $300 a month. And so why, as a renter, would you want to continue to be at the mercy of your landlord with not having the luxury of being able to improve your place? Or if you did, it's the landlord's equity that you're building, not your own. I was actually talking to somebody who had just graduated from high school a few years ago, and she was telling me that right now she wants to buy a house, and she may be calling me pretty soon. She had mentioned to me that she's paying $850 a month in rent for a 1-bedroom, 1-bath, 550 square foot apartment. I mean, to me, that is just unbelievable that it has gotten to that point. And if you look at somebody paying $850 and they want to be a first-time home buyer, you could probably, even if you did a 0 down payment program with all the affordable programs that we offer, I can do a rent versus buy scenario for some of these people. They could get into their first home for probably $1,150, $1,200 a month, which, yes, granted, that is a jump up from the $850 in rent that they're paying now. But guess what? If they're getting into a home for $1,250, and that includes taxes, insurance, principal and interest, mortgage insurance, guess what? That payment's not going to go up. The rent is only going to go up each and every year that their lease is renewed. So at least you have a fixed payment, not to mention you're going to build equity. And all the improvements that you're going to have done, you're going to be able to, over time, have a home that you paid, let's say, $200,000 for, be worth maybe $280, 7, 8, 9 years down the road with the right improvements in the right market that we're in. But I think most importantly, you know, when you're looking at people that are paying monthly rent, you have people that, with the tax deductions that are offered, you can have your withholding even altered on your paycheck to where you have more money coming out on a net basis every month and still not affect your tax liability. And I have ways that I can show first-time buyers how to accomplish that. And I think the best thing for somebody to do is to contact me, and I can give them a rent versus buy scenario for them, and they can see the benefits of home ownership. And it's clear that people are starting to get that because of all the calls that we're getting, John. Please contact us at these numbers below, or you can reach us on Google+, on Twitter, or on our Facebook page. Thank you for watching our video.